Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve, joined today by Justin Nielsen. And on today's show, we're going to take a look at another strong up day for the stock market. S&P 500 just closed above that 4,000 level. Great day of outperformance for the NASDAQ again as chip stocks continue to outperform. But before we discuss all those goodies, let me throw it over to Justin, who's got actually, we'll make it four stocks to watch for today.
Well, we'll do three, and we'll give an honorable mention. We want to
Honorable
just follow
mention.
up on Etsy since that was mentioned on Friday's SMT. But we'll, as you said, chips were strong, so we'll start with Lattice Semiconductor (LSCC), move on to Medpace (MEDP), and then finish it up with IGT (International Game Technology).
All right. Well, the Nasdaq outperformed again. Now, Justin, on Friday we had options expiration. It was pretty impressive to see volume at least until the very end of the session. Looked like it was going to even come in higher than Friday. We'll have to see because we got a big rush of trading volume on Friday when options expired. But volume was pretty good in the rally today. And here's the Nasdaq clearly with its sights set on the 200-day moving average, up 2% today.
Yeah, and even though volume might not get above the options expiration of Friday, it still looked pretty strong. I mean, it's
Yeah.
definitely above average, and it was a nice follow-up to Friday's activity. And here again, tech is the story, right? If we take a look at XLK, you can kind of see that XLK, which is the Spider S&P 500 tech ETF, the sector Spider, that was the strongest today, and that got above its 200-day moving average line. Now, the trick here will be as we look back at the S&P 500, can we get not just above the 200-day line like we did on Friday for the S&P 500, but can we stay above there? And there's this long-term downtrend line that we've been looking at since the top in last year. That can we get above that? It looks like we're right there today with today's activity, maybe a little bit above, but it needs to stay above there. So that's going to be the next trick. And we also want to see it kind of get above that 4,100 level on the S&P 500 from earlier in December and November. That's an important level. You go back even that in September, it hit kind of that area, and even back in June and May, it kind of hit that area and stalled out. So those are some of the levels we're watching. But right now, there's definitely been a shift, more strength, and that's giving more opportunities in individual stocks.
Yeah, we first changed our outlook in IBD January 6th is when we got that follow-through day for the Nasdaq and went into a confirmed uptrend. We've been there ever since. And at one point, the Dow Jones Industrial Average was doing the heavy lifting for a while. Now it's really the Nasdaq that is outperforming. The Dow, doesn't look terrible. It had a pretty harsh break of the 50-day moving average last week, but it's trying to get back above that line and. Probably technically the maybe the weakest out of the indexes at this point, but still not too bad here.
Yeah, it definitely was a shift, right? Because from the October 13th bottom, the ultimate low of this bear market, that's where the Dow really kind of performed straight out of the gate and was really strong. A lot of the industrial names were showing a lot of strength. But since we've had this December 28th bottom, kind of a nearer term bottom, it seems like growth has really been the story here. And even a shift away from value, which has been leading for most of 2022, it really seems like growth has come on a lot stronger. And again, tech has been one of the big parts of that, but also consumer discretionary. We're seeing strength in retail, so it's getting a little bit more broad based. It feels like.
No doubt about it. It's definitely more broad based. I mean, you've got home builders showing
Yep.
price strength. You've got, we've been kind of, commiserating around all these beaten down tech stocks that just keep coming up off of lows. But now, I mean, you are actually starting to see, more breakouts. And again, the home builders, technology stocks, retail stocks have been outperforming. Very counterintuitive with all these worries about the economy. But let's take a
Sure.
look at IWM here. This is the Russell 2000. It also had a nice day. Looks like it's up about 1.2%. Nice support at the 200-day moving average Friday with some volume, and it's fighting a good fight here as well.
Yeah, and that's one of the things about last week. We were kind of looking for some type of pullback or sideways action, just because of how much we had come up off that December 28th bottom, and we got it, but this is the trick. You kind of get what you ask for, but you have to kind of know how to handle it. So that was kind of an opportunity in some cases to pick up some more shares of certain things, especially on Friday when you saw that bounce. And we should have mentioned that Friday, that's what we call a subsequent follow through day. So you mentioned the January 6th follow through day. The fact that on Friday we got a subsequent follow through day, that's kind of showing that we're going in the right direction at least.
We actually had a subsequent follow-through day for the Nasdaq even before Friday. So this is we had the follow-through day on January 6th, and then 2 other days I think where the Nasdaq showed a
Right.
really healthy percentage gain and nice volume. And I just want to go back to the Nasdaq chart as well, just to take a look and see what volume is looking like off the bottom here. I think it's pretty impressive. You look at this rally in the Nasdaq when it hit that low around 10,000. 267, and then you look at the volume on up days that has this is definitely a sign that some fresh money is coming in from the sidelines, not just retail money but probably some institutional money as well.
And sure, we do have that story out there of the possibility of a bear market rally. This is where we've gotten ahead of ourselves before, where there's this anticipatory level of, hey, the Fed is going to have to slow down or start not being as restrictive in their Fed rate hikes, and that anticipation has been there before, but you got to figure that the Fed has got to be kind of at the tail end. How much of that is priced in already? Well, that's the question that we're going to find out, right?
Yeah. I mean, it really seems the market seems to be growing more optimistic that there will, in fact, be a soft landing for the economy, and the Fed is not going to have to be nearly as aggressive with rate hikes. We'll have to see how that all shapes up. We do have a very busy week of fourth quarter earnings this week.
Right.
We're very, very busy next week as well. So the next 2 weeks, we're just going to get hammered with corporate earnings reports. And on IBD Live this morning on the news, I mentioned a pretty busy week of economic data. We have the first estimate to fourth quarter GDP later this week, and then the really big economic report, personal income and spending, on Friday. That's got inside there the core or the personal consumption expenditures price index, which is the Fed's preferred inflation gauge, and inflation is expected to cool again. So hopefully the market won't be disappointed. Justin, you've got several ETFs to look at here too. I know we added a couple of ETFs to leaderboard today, but let's start by taking a look at XLK. Well, we looked at that earlier, the technology.
We did. Yep. And you know what? We could go ahead and look at SMH too, because that's the chips, right? And the chips have been looking strong. So I think the fact that has already gotten above its 200-day moving average line and is making progress. I mean, look at that's almost a 5% move today, and that's showing strength. Again, chips are just driving so much of so many different parts of our economy now. Everything from the Deere tractors to the computers. It's everything has chips in it now.
Cars, data center
Yeah.
chips, and it's a super fast growing area. So yeah, nice to see volume behind the SMH as well today. So that's what got this a spot on leaderboard. And then let's also take a look at the retailers.
10 holdings, as opposed to something like XLE, where the top two holdings, ExxonMobil and Chevron, account for over 40% of the weight for XLE. So very different in that regard. So again, it just kind of goes to show you, when you can have a lot, something that's so broad based, make a 3% move, that just shows you that there's a lot happening in retail, a lot of strength there. And then, of course, you mentioned ITB, the home builders. We should take a quick look at that, because that's been an area of strength recently. Been holding really above the 50-day moving average line since most of October. So that's good. Now, XLI and XLE, the industrials and energy, those are two areas that did underperform today. They weren't as strong. This was a lot more about the tech side.
Yeah, we're going to get a bunch of home builder reports this week and the following week. I was just going through the earnings calendar, and we'll hear from DR Horton, DHI, tomorrow. So we'll see if this ITB can continue its winning ways. All right, you ready to talk some individual stocks here?
Yeah, let's do it.
we mentioned the tremendous performance of semiconductor stocks, and if you're a stock market bull, you definitely want to see, the chips outperforming here. Many have been rising in pretty decent volume. Maybe thinking that the worst of the chip glut is over, but let's take a look at LSCC here, which is in an interesting setup.
Yeah, so we've got a cup with handle here. The cup is was pretty deep. It was almost 50% deep for the cup, but the handle was a lot more mild, 19%. Got support right there at the 50-day moving average line, bounced up, and it's been kind of coming up strong since that follow-through day on January 6th. So we had a little bit of a pullback last week, but not too bad. And it really got contained by its 21-day moving average line and even its 10-day line. So good strength here. Now you could make that 76.47, add 10 cents to that as the buy point, but I think this is kind of giving you a potential early entry right here. The one thing I would say that I didn't like was a little bit of a lack of volume today. It did perk up a little bit versus Friday, but I would have liked to see a little bit more volume in it today. But again, this is an area that we've just been seeing a lot of strength. And specifically, when you look at SMH and how that's just gotten above its 200-day moving average line, I think the chips to really focus on are the ones that are already have been trading above their 200-day lines, their 50-day lines, their 21-day lines, and so on. The ones that have been showing more strength and more relative strength are the ones that I think are more attractive. And LSCC, that's got a 96 relative strength. So that's the kind of stuff we're looking at.
Definitely looking good. All right, next up is going to be Medpace MEDP, which showed great action today. This is a what they call a contract research organization, so they provide clinical development services to big pharma, biotech, and good volume here, Justin, as this stock clears a nice consolidation here.
Yeah, absolutely. And you know what? Let's go to the weekly chart on this just to
Sure.
kind of show how there was this level that it was bumping its head on, and it looks like it's really trying to conquer that level of prior resistance. So that level right around 230, and it went back even further to December 21 quarter, where it had topped out at 230, and had been basing for quite a while. I mean, that's a really long base, pretty deep at 45%. But what's really interesting is what happened at its last earnings report when it jumped up over 40% for that week, and it just held all of those gains. It just wasn't willing to give up any of those gains, was pretty much contained by that 10-week moving average line. And if we go ahead and shift back to the daily, you can see that, in real stark contrast how that October 25th was the day where it jumped 37% on that day, and it just really hasn't given up much of that. And so that's, I think, a really good sign. You've got that relative strength line. You see a blue dot there because its relative strength line got to new highs as this was basing, and it broke out today. Now, this was one that did offer some early entry points. So Leaderboard put this on earlier. We actually added to it. So this was already a 3/4 position for us. And I would say that, at the very least, if not the bounce off the 50-day line, but that January 10th, that big move above 220 was also, I think, a good place to consider either adding to a position if you had one or starting a position. And I think that's the day that Leaderboard was adding on.
Yeah, and we had an opportunity to increase the position again today, but we chose not to, just because we're not sure. Even though we feel like the market seems to be improving for technical breakouts to new highs, because it wasn't that long ago where the landscape or the market environment for breakouts just was not very good, because it's really institutions that are the true drivers of technical breakouts. And again, with Medpace, you did get some good volume behind the breakout today. So this is another reason to be, optimistic about the market. The fact that we are seeing some signs that some institutional money is coming in from the sidelines. So good day for Medpace. All right, let's move on and talk about IGT, International Game Technology. Are they still known by that, or do they just go by IGT?
Yeah, International Game Technology. Yeah. So I mean, this one has been out. This was in some of our model books model books from way back,
Yeah.
decades ago. And here we have a nice cup that's shaping up. So it's just coming up to that level. So the question now is, can it surpass it? Certainly the leisure gaming equipment area, that's been coming up strong. It's group number 18 now out of 197. Part of that is, I mean, you look at some of the like the Las Vegas Sands and Wynn and things like that. They've been doing much better, especially as the zero tolerance policy for COVID for China has been starting to get loosened. Las Vegas Sands. I mean, we kind of joke that it's called Las Vegas Sands since most of their revenue comes from Macau now, in China, not Las Vegas anymore. So. Certainly, if you're going to have those casino operators and everything doing better, that's also going to speak well for some of those follow-on plays like international game technology that make the equipment for them. So this was a pretty shallow base, only 17% for this cup, and now it's been contained by the 50-day moving average line, and we'll see if it has the gumption to surpass that level and cause a breakout.
Yeah, it looks really good. You mentioned Wynn and Las Vegas Sands, two big leaders in this group, and I thought Ed Carson raised an interesting point this morning just on the IBD Live chat that China right now is celebrating their the Lunar New
Right.
Year. So basically, the whole country is just on vacation for the week, and Ed said the possibility of sort of an outbreak of COVID cases or just an acceleration of COVID cases because of all the traveling to and from. He said that could just something to keep an eye on. But I know
Yeah.
the Hang Seng Index was closed today. I believe it's closed Tuesday and Wednesday, and I believe the Shanghai Composite is closed all week. But the outperformance of the China stocks certainly has been a sight to behold. All
Mhm.
right, and we normally stop at three stocks, but we did want to revisit a name that was discussed Friday, I believe, on the Stock Market Today video
It
with
was.
Ed and Ali, and we'll take a look at Etsy, which is another stock trying to come off a bottom here, and frankly, making a pretty good case for a bottom.
Yeah, I just wanted to point out that Ed brought this up as a setup, and this is actually something that we added to Swing Trader on Friday, and it had a nice follow up today. So it's this follow up action that I really like to see. A strong day on Friday, followed up by even more strength today. If you can keep on doing that, that's how you get a trend, as opposed to what we had before, where you'd have one strong day and then you'd take 3 steps back, and that was really hard to make any progress, either on the long side or the short side. So hopefully this follow-up action that we're seeing portends to more trending, and it's when you're trending that's when you can make the big money.
Well, since the Nasdaq initially confirmed this uptrend on January 6th, we really have not seen much in the way at all of institutional selling. I think we only have just one distribution day on the Nasdaq, and we could get some more, maybe this week, maybe next week, but we just don't want to see like a whole bunch of them start to just happen all at once. And like I said,
Right.
the next 2 weeks is going to be pretty busy in terms of some mega cap tech earnings. Next week, it's going to be Apple, Google, and Amazon, Meta. This week we've got some key earnings reports in the chip sector, and again, some economic data that could move markets as well. So, encouraged by the market's action, and we'll have to see. What this week brings. So, thanks very much, Justin, for your commentary as always. And folks, don't forget to join us if you haven't yet. Join us for IBD Live tomorrow morning. David Ryan is going to be our weekly guest, and he's just fantastic with his market insight. You can go to investors.com/IBD Live for more information. Sign up for a trial. Lots of stocks being talked about these days as market conditions continue to improve. So that'll do it for today. We'll see you back here tomorrow. I think it's going to be Ali and Ed. Until then, have a great afternoon, everybody.